Hello investors, I'm Stuart Kruse and welcome to KAM's chart of the day. Today we're going to be talking about S&P earnings and the projected S&P earnings and where does that put the S&P after we had this big sell-off and are continuing in this sell-off of September. So let's look at the projected earnings. Right now we've looked at the S&P as of second quarter 2019. These are real reported earnings, and then when the COVID hit, here's the chart. The COVID hits and we have the lockdown first quarter. Our S&P earnings get cut by more than 50% from $40 a share down to $19.50. And then the second quarter, we rebounded about 10%. And now we're looking at a projection of some pretty nice growth here in the third quarter. These are projections. And then fourth quarter, and then now first quarter 2021, second quarter 21. So when do we get back up above our pre-COVID levels? Well, it's not really until third quarter 2021. But the S&P is a forward-looking discounting mechanism. So what they might suggest is we're going to anticipate that these earnings are going to happen not in this quarter. We're not going to react to them in the third quarter, but we'll probably react to them in the first quarter. So what I really did here was this blue line, these are real numbers. This blue line is the level of the S&P 500, and the orange is projected. Now, if I apply the multiples of these earnings onto the S&P pre-COVID levels, onto these numbers and these projected S&P earnings, this is the projected S&P chart that we should get if the market's going to look forward 6 months. So what does that mean? Well, this gray line is where the S&P is at right now. And what this says is, as we're looking forward, even a year ahead of time into fourth quarter of 2021, applying the same multiples and anticipating a particular set of earnings, we should basically go nowhere from here for the next year or 4 or 5 quarters on the S&P 500. That even kind of projects or predicts maybe another 8 to 10% decline from here over the next quarter or two. So, and this is assuming that we have higher multiples right here and then we kind of level off back to the pre-COVID multiple levels. So I wouldn't really expect a lot of PE expansion, a lot of multiple expansion, or a lot of increase in the S&P 500 from here until we catch up to the earnings and we actually see earnings are on pace. Now, of course, if we get earnings that are well ahead of expectations, that's great, and then that could signal the S&P bigger move up. On the other hand, if we get a signal of the S&P or lockdown and we have reduced earnings estimates, then that could cause a disruption in these kind of estimates. But for right now, I would suggest that the S&P is going to be a little bit dead money for the next year or so until we kind of get through the actual earnings estimates and see if they are in line with the reality. So this is Stuart Kruse at Kruse Asset Management telling you to invest with the odds in your favor.